Greetings to all. This is Padmavathy working as Assistant Professor in Bishop College, Trichurapalli. In today's class, we are going to discuss about Goods and Services Tax. So in short, we call it as GST. Let's get into the topic. So now we are going to look into the overview of GST. So as we all know, GST has been put into practice for our one nation, one tax. So our then Prime Minister, Mr. Atal Bihari Vajpayee sir, he is the father of GST, and he has initiated this process, and this came into practice on 1st July 2017. And another important feature is the main thing for the implementation of GST is consumption based tax. The final destination point should be there, right? Okay. And another thing is goods and services tax means it is the tax on the supply of services, supply of goods and services, or both of them, both goods as well as services. So now we are looking about the constitutional setup. So in the 101st Amendment Act 2016, this came into practice. So in the Article 246A, it states about the provisions related to the power to levy taxes on the goods that are being supplied, on the services that are being supplied by the state government and central government. And next one is about the Article 269A. 269A is about the interstate supply. So by interstate supply, what we mean is the transaction, the supply of services or goods among the between the states. So Article 279A states about the GST Council. So this GST Council is the regulatory body or the constitutional body, the governing body, which deals with the affairs of the GST, that is goods and services tax. And next we are going to discuss about the subject matters that are kept outside the purview of GST. Property tax such as stamp duty, motor vehicles tax, alcoholic liquor for human consumption, and petroleum products like crude oil, diesel. So all those things are kept out of the purview of GST. So the various types of GST that are charged by the central government of India is CGST. CGST stands for Central Goods and Services Tax. And we do have SGST. SGST stands for State Goods Services Tax. And IGST. So IGST stands for Integrated Goods and Services Tax. And we do have UTGST. So this UTGST is about the transactions or the supply of goods and services between Union Territory. So Union Territory Goods and Services Tax. So coming to the levy of tax. So how taxes are levied in GST? So intrastate supply. If the supply of goods and services are between the states, so the taxes that are applicable are, one is the CGST and the other one is the SGST, Central Goods and Services Tax, and also the State Goods and Services Tax. Likewise, for intra-union territory supply, the taxes that are applicable are CGST and UTGST. And for the interstate supply, so whenever there is a supply of good or services between two states, for example, a supply of good from Maharashtra to Tamil Nadu, we call it as Integrated Goods and Services Tax. And according to GST, in the context of GST, the classification of the Indian states are like this. There are 31 states and 5 union territories. So in that 31 states, it comprises of 28 states plus 3. So plus 3 comprises of the Delhi, Jammu and Kashmir and Puducherry. And the rest of the union territories, namely Andaman and Nicobar Islands, Lakshadweep Islands, Chandigarh, Ladakh, Dadra and Nagar Haveli, and Daman and Diu. So coming to the rates of GST, as we all know that every registered business unit should raise invoice on the taxable amount of the supply that has been made. So the rates of GST, the different slab rates are 5 in number. They are 0. 0 is for 0% tax is being levied. This is for the nil rated goods. So that comes under the essential items. So the nature of good is the essential items, where it includes the fresh milk, fresh meat. So all the essential and basic essential items that we need in our day-to-day routine life, that is nil rated. So we need not pay tax on them, that is 0%. And next we have basic necessities. So basic necessities is charged at 5%. So this includes sugar and tea and Indian sweets. So all those items come under this category. And next we have standard goods. Standard goods are charged at 12% GST. We have to pay 12% GST on the standard goods. Examples for standard goods are mobile phones, computers. So supposing if for example, if the cost of a mobile is 10,000, and if we apply 12% on 10,000, it will become 1,200. So 1,200 will be your tax amount. So that amount will be added with the value of the supply, that is 10,000. So the total amount should be 11,200. And the next one is the consumer products. So consumer products are charged at 18% GST. And next one is the luxury and sin goods. So luxury goods, by this what we mean is for the luxury goods that are available for the affluent rich people, rich society people, which is not of basic need. So that comes under luxury goods. Example for those commodities are, those goods are dishwashing machine, air conditioners. So for all those things we have to pay 28% tax. And in addition to that sin good, we have cigarettes and all those things. For that we have to pay compensation cess too for the sin good. And the next one is the GST laws that are prevailing in India. The act that is passed is given in the first column, and second we have tax, and third one is for what purpose this act was being enacted. So the act, first act is the Union Territory Goods and Services Act 2017. So the tax that is included in this is UTGST, and the purpose or the objective of this act is to levy and collect UTGST on intra-state supplies, on intra-UT supplies, that is on intra-Union Territory supplies. And next one is the GST Compensation to States Act 2017. So this is for the compensation that is to be given to the states. And the purpose is to compensate for the loss of revenue, if any, due to the introduction of GST. And the next one is the CGST Act. So this again in the year 2017 it was passed to levy and collect CGST. As the name tells us, it is purely for the collection of CGST, that is Central Goods and Services Tax in intrastate supplies. And the Integrated Goods and Services Tax Act 2017, IGST Act was passed to levy and collect IGST, Integrated Goods and Services Tax, that is between states, from one state to another state. So this tax act was enacted. And the next one is State Goods and Services Act. So this is purely for the collection, to levy a tax and to collect tax on the intra-state supplies. So within the state, if there is any supply of good or service, this is the tax to be levied. So this act will be prevailing.